Hello everybody, Carlos here from Foresight FX and welcome to another forecast video, December 5th, 2013. Let's get right into the forecast review. We were looking for a sell setup downward move on the dollar yen, and the market indeed went towards the downside, reaching our first, missing our second target by a few ticks. Now the difference will lie depending on where you went short. So I have here a represented answer for a couple of questions that I got from a few of you throughout the day. Carlos, what happened if I find a pivot step not at 8 o'clock but before coming off the synergy zone? I just put it this way. Let me extend it in this area. I think you got the point. Market got into the zone a little bit earlier, which is valid. And I set this, I think, a couple of weeks ago. It's valid because the yen usually moves at the beginning of the stages of the opening of the Asian market. Obviously, Japanese yen opens with uh, the market at 8 p.m. Eastern Standard Time, which is 8 o'clock opening of the market of the Asian market. So Japanese yen at that time could set itself up, and this is right. You could have taken this pivot step. That was a great trade. If you took this trade, though, it provided you with about 40 out of 58 points gainer. Second would be this small pivot correction towards the upper side. It's a small look, but I like to go as low as, I seldom do it, but you can go as low as a 15-minute chart, and this is how it would look at that time, okay? So right at 8 o'clock, it brought in the opportunity to short the market right there. Market went against you for a while. Stop loss would be above the synergy zone area, and the market then continued towards the downside. That would have brought about a total of 33 points to first target only 16, and it died out in there. And last, let me go to the 1 hour chart. This is how it looked. One moment. And okay, it would look something like so. That would be the pivot, that would be the entry, and the market never gave you too much of a movement in that case. On the 1 hour chart, the market moved about 90 to 20 points, and the market just closed about 3 points profit about on top of your break-even point. So nevertheless, this was a profitable trade or a break-even point with the worst failed. But like 90% of you are choosing the execution of the 30-minute chart. This would have been the great entry right there at 8 o'clock. If you waited a little bit earlier, later, that would be the entry, and the market didn't give us too much movement. So we go to the 4 hour chart, see what's going on beyond the area of the 20. Warning signal starting to come in as a potential end of the pullback. So what we should do in these terms, I'm expecting the market to pull a little bit further up now. I see that a healthy retracement has been completed, so I don't feel quite comfortable taking any more trades in this scenario right here. Okay, so I'm going to be standing outside for now on the dollar yen for the moment. We're probably going to come back later on in a few minutes to see what we can analyze on it, but quite honestly, I don't feel comfortable with it. Continuing trading it. So moving into the Australian dollar, we were standing outside, and the market indeed, let me go to the 1 hour chart, sideways. See, the market sideways, and now finding a possible reversal point. They're taking this highs right here, but they have not closed above and beyond it. So we're still on a sideways situation. So we might as well wait until the market sets itself up and continuing towards the upper side. Remember on the previous video, once again, check the video below, that I said that this downward movement was kind of a false awkward move, and the MACD was supposed to complete the cycle above the 80 level, and that didn't happen. This was a divergence trade consistency. And what I mean by that, a few of you ask me, is that while prices are making new lows, okay, let me just draw that like that. The cross of the MACD is pointing towards the upper side. This is a typical, very old school type of divergent tendency. Very powerful indeed. So, and take a look what the market actually did after we analyze that. Could be the possibility and reverse altogether. Okay, so now we just need to wait until prices actually start moving with a little bit more conviction towards the upper side. And by that I mean this high is an important high and has been tested but not closed beyond and above it. And although the market broke above this level, it isn't for that much. The market could sideways from here. So we got to make sure that they indeed start moving with decision. Moving into the euro dollar. Now, euro dollar, on the other hand, finally broke to one side very nicely. Um, the cross of the moving average, although did not complete this cycle, I see the angle of attack very nicely. So we're looking for an opportunity to go along the market and a pullback. All right, so we choose to to go one step shorter on the one. I'm trying to find some analysis here. All right, we got a pullback between 36.21 and 35.85, targeting 36.90, 37.17, and 37.37. Now I see this as a tight target. To be quite honest, we go to all the way to the 4-hour chart. You understand what I'm talking about. This kind of look like a tight area of targeting between each other. So a possible top formation might be here anytime soon, meaning that this has been cut short. The cycle was supposed to go all the way to the 30-20 level, meaning to have a healthy normal trend. It looks like news report and reaction just took the market a little bit off balance, but price action rules in this case, and we have confirmation all across the board on the euro dollar. So what we're going to be doing is looking for an opportunity on a pullback on 36.21 and 36.85, targeting the following targets here. See how that works out. Once again, be careful as we're on overbought conditions in this market once again. So go with low amount of contracts or tight your stop or take your profits as soon as you see 20 to 40 points. Remember, that's a guidance. 20 to 40 points has been created as a suggestion for you to take quick profit, because it's more often than not that we'll see 20 to 40 point on any run. So we would like you to collect pips and make profits as soon as you see them. Now, if you're a multi-lot trader, now that's a difference. Multi-lot trader, meaning 2 mini lots, 3 mini lots, two full contracts or more. Our suggestion will always be get yourself in. Once you see 20 to 40 points of move, liquidate half of those trades and manage the remaining one. The reason for that is that you can extract the most out of the market, but if you get stopped out, you're probably gonna lose almost nothing, or at least get some profit out of the second position that you have left. All right, but that's the rule. 20 to 40 is for a quick scalp, not quick scalp, quick trader incentive of get in, you make your trade, and you're done. Even if it moves 120 points, it doesn't matter. The point is to get in, get your 20, 30, 40 points, and you're done. And if you were able to multi-contract trading, then you manage your trade accordingly, because that's how the big time players does it. What they call the average in, average out. Average in is they instead of buying 100 contracts in one sitting, that could affect the filling of their position, so they go by blocks of 10 or blocks of 20s until all the amount of their position is filled. And the same thing will apply when they're getting out, you see. So that was just an idea. So we're trying to mimic the same thing but a very small scale, so it still works the same. Last but not least, British pound. We got it here. We were standing aside and the market is completely whacked. Honestly, I don't like it. Go to the 4-hour chart. Let's see what it says. And now it's finally wide apart going downwards, but price action, it's kind of undecided. Let me explain. Let me go to the 1-hour chart and squeeze back. This low is very important low, and they tested it. Here's a low, and they test it, but they never close below it. So I don't feel comfortable with this type of trading on the British pound. I will wait to see a nicer move towards the downside. I'm going to be 100% honest here and wait for a healthy pullback and get into a synergy zone. That's my 2 cents in here. So far we're going to be standing outside on the British pound, looking for a synergy zone entry on the euro dollar, standing outside on the sideways Australian dollar, although price action has indicated in the beginning stages of an intended move towards the upper side, and it's totally let's see, 4-hour chart, it's back up by the MACD. I want to see a more conviction move in here, since it's been, you know, so oversold and a little bit erratic on the sideways. I don't want to buy here and the market correct back down against it, even though they're, you know, intended to move to the upper side. So that's my 2 cents of intuition into this trade on the Australian dollar, standing outside. And last but not least, the market on the dollar yen. I said that I will come back in here, and I see the weather part of this, guys, right here. So I'm going to take a second closer look to see if we can find something of our taste. Let me eliminate this, guys, so we don't need them anymore. And let's see what can I find in here. All right, let's just have some fun with the dollar yen. We're looking for a pullback at 102.03, 102.39, tight spread on the synergy zone. Looking for a target at 101.51, 101.22, and 194. Now it's a pretty close. It's 6 o'clock. So we're about 2 hours from the opening of the Asian market. So pay close attention. Let's get started with the dollar yen and analyze the market. I'm going to try to help you out in terms of timing, as I noticed that the dollar yen usually runs or set itself up earlier than the remaining pairs. So this will bring us with a little bit of more opportunity, I guess. So let's just do that. And on the other hand, once again, we're talking about, let's see how far, not much, just about 29, 30 points away from the synergy zone. Once again, just pay close attention, go very low in terms of your contract size. Once again, because of the fact that the market is already into the warning signal of a reversal point. So one more test towards the downside might be here, but we are also in a possibilities for the market to bounce back up sideways and then continue towards the upper side. Let's just be very careful. But it will bring us some excitement into the terms of trading. All right, so that's it for now. This is Carlos Diaz from Foresight FX, and I'll see you on the next forecast.